Hello guys, so welcome to the channel. So in this video we're going to be talking about smart money concept, and we're going to equally be seeing why this strategy is good and why it works and how it actually does works, and why I actually recommend that you should be using it, because it actually simplifies the charts a lot for you. It actually minimizes your uptime just looking at the chart wondering what to do. It makes you to wait for the markets to come to you rather than you just watching, trying to catch something out of nothing. So with that being said, let's get straight to it. So the as we all know, the SMC strategy, right, that smart money concept, actually works on most financial markets. It works on the crypto markets, on forex markets, even on the stock markets as well. So right now I'm actually on the Bitcoin price chart, and right here we have a break to the upside, another break to the upside, and once we have consecutive breaks to the upside, then we then understand that we are what, in an uptrend. Once we have breaks to the downside, we understand that we are in a downtrend, right? So the market has shifted. Okay, so that's one thing to note. And whenever we have a break of structure, there's always a retracement that the market gives out after it clears out liquidity. That's people that have been trying to buy earlier on before it starts going the right direction. So that's one thing to actually know about the whole trading strategy as well. If you want more in-depth details about how to go about it, you can watch some of my previous videos where I did actually take a lot of time to explain clearly what you should be waiting to see before you get into a position. I'm going to be going through those as well in this video, but I want to equally show us that it works across different markets. So I want to go through diverse pairs, trading pairs, so we get to understand how to move with them. So right now this is the BTC USD market, and right here we had a break to the upside. Once we had a break to the upside, the market did retrace. As we can see here, it retraced from here, dished out this structure here. Now this is not necessarily a break of structure because it's just a wick that closed above. It's not a candle. So right now we are literally in an internal structure until this market breaks this layer here. Then we understand that we are then in an uptrend. But right now the market is actually currently reacting from this particular structure here. So now, as you all know, once you have a break to the upside, you normally wait for the market to be give out that retracement before you make your entry. Now the whole problem that comes in is, when do I then make my entry? This is a retracement. Why didn't I make my entry up on this retracement? Why didn't I make my entry equally around here? This equal another retracement. Why did I make an entry from here? Why didn't I do it from here? So all of these things, to solve this problem, is the way what I've just made simple for you is, whenever you find a retracement like this, or alright, look for a change of character before you enter the trade. It's a confirmation entry, right? The change of character helps you to understand that the market is about to shift direction regardless of the time frame that you're working with, right? So what do I mean by that? So currently, assume that you had a break of structure right here to the upside. Now you're waiting patiently that for the market to actually retrace and come to a potential order block before you then make your entry randomly. But now the thing is, you never know what specific area, because you could react from here, like you can see, reacted from here, push to the upside. It gave a retracement, it did push here to the upside. This is not a valid break of structure, I don't consider that. And then it then retraced again and went further below to this particular area. So the question now then is it valid for me to start placing my order block around this zone here, or I should start placing the order block around this zone? So I'm solving that problem for you by making you understand that whenever you find the market retracing, what you need to do is wait for a change of character. What do I mean by that? I'll step this chart down a little bit to the 4-hour time frame, and this is how you need to always analyze your markets as well. Whenever you come to the daily time frame, it just gives you direction that, oh, okay, we had a break of structure, market was bullish, but we have not had another break of structure, so this is just an internal structure. So you just get that perspective of what's happening around the market. Then from there, now if I push the 4-hour time frame, I want us to see something clearly here. You push the 4-hour time frame, for instance, right, and you come to this zone here like this, you can see that once we had this break of structure to this side here, we started having consecutive break of structures to the downside. If you can look closely, this is even one break here to the downside, and this is the origin here that caused it as well. So you can see here, this is another break to the downside as well, and this is equally another break. And if you go much further, you realize that we somehow did have another break to the downside from here as well. We did have another kind of partial break of structure to the downside here as well. So once we kept on having breaks to the downside, and once we keep having consistent breaks to the downside, then it makes us to understand that we are then in what, a kind of retracement, a pullback. So now what I want you to see clearly is what I want you to see clearly here is that whenever you find that the market gets around your potential order block area. What do I mean by that? I know very well that okay, this market is likely to react from this zone where impulsive move started, because your order block, by definition, the order block is simply an area where impulsive move started from. So by definition, I know very well that this market is likely to react from this zone here, or it is to react from this zone below here, because I can see that impulsive movement started from this zone, while from here equally impulsive movement start. But most of the times you find that this zone here, sometimes the market gets to it and reacts from it, like as maybe you can see here. Sometimes it reacts to it and it starts going up. Sometimes it gets to it and it violates it and it goes to the bottom. So you never really know where it's going to react from. So now, what I'm trying to help you solve here is that in order to solve this problem of where is potentially the market going to react from, what you have to then do is that you have to always try to just wait patiently. When the market gets to your potential order block area, what you want to see is you want to see a break or structure at least, So this is the last break to the upside. This is the origin that caused it. I want to see the market actually pull back to the upside. Once it actually clears, it breaks that area to the upside, then it then makes me to know that okay, we are then about to shift structures. So once you can see here that we did clear that particular layer there, okay, we did, you can call it recent resistance or whatever you can call it. But once that structure is taken out, you then wait for the retracement, right? Once that retracement happen, now you'll be like, okay, once this retracement is happening, where do I wait for it? I always say that wait for this kind of trend line liquidity around here to be cleared. Always when this liquidity around is taken away, then you see the market react. That's why potentially this area is where you should wait for it, and you mechanically target 1:3. Sometimes even if the market is to go your way before going back against you, you will definitely have gotten your target then, right? That's one thing to note. So now, with that being said, let's move along again. You can see clearly here that I'm still on the daily time frame, yeah, on the 4-hour time frame, right? So it works if you're a scalper, if you're a swing trader, the same thing works. So now, following this particular chart here, I can see clearly that I know very well that okay, this is the Bitcoin currency pair. I know very well that there's a very bullish sentiment from this pair right from here, and I know that the market has a high probability of reacting around one of these zones here. Right, let me shift it for us to see. Around one of these zones here, right? Even the upcoming week, I know literally might come down much further to kind of retest these areas, but we are just working based on what we see, not based on what we feel like. So right now, so why this chart is still going down, there's something to take note from here, right? If we are to mark out our structures, that's why I say this thing is always going to help you take out the stress. We had a break here to the downside, but step down to the 1-hour time frame so we can see, right? We had the break to the downside here, right? This was the break to the downside. Now we equally did have another break here to the downside. Yeah. Now you can call that one a break, whatever. We did have, this is the last one to the downside according to the 1-hour time frame. This is the origin that caused that break of structure there, right? This is that origin that caused it there. Now, since it's the origin that caused it, we can see that the origin was violated from here. Then this dished out what? It dished out the change of what? Character. For someone will be like, okay, this is where it got broken from. Even if you were choosing this zone from here, no, like the main area, you find that it really got cleared out from this layer here. This is where it got dished out in a way. So we find that the market cleared this particular zone to the upside. Your duty now is to always enter on the retracement path, right? Once you see this market retrace, then you're good to enter. Even if you missed it and you came and you found this particular zone here, you're still good to enter. I think I did catch mine from here. This is where I came and I caught mine, because I knew very well that the market is having a high tendency mechanically 1:3, and I knew so well that the market is always having a high tendency to react from this particular zone here, this particular, especially where there's impulsive move. It always likes to clear out some of these guys here before going its way. So I knew that by default. So once you understand that, it saves you a lot of the stress in a way. This is where the change of character did happen, like that. So if you can master this strategy, then it's really going to help top up your trading game and likes of that. And currently where we are today with Bitcoin, you can see that we did have here, you can see clearly here like another break of structure here to the, this is equally another break of structure here to the upside, right? These are internal structures. Change of character simply means we're shifting direction, right? Since all of this is an internal structure from the daily time frame, then we understand that okay, we're working with the internal structures, right? So we have this break of structure to the upside. Once we had this break of structure, as I said, you always want the market to now give out that retracement. So now, once it's giving out that retracement, you know very well that okay, at what point is this market likely going to react from? Is it going to react from this zone here, from this area, or is it going to react from this area, this area, or this area? So you're waiting on this line here to see a potential what change of character. That's what you're waiting for. So if I take this thing down further, let's say to the 15 minute, for us to see clearly what's happening there, like that. If I take this thing further to the 15-minute time frame, you can see that okay, we had break up. The market has not yet closed below this here, so that's why I'm still considering it. Right, this is where we are currently at. This week is still supporting it, and likes of that. So you can see clearly that from this particular chart here, this was the last break of structure to the downside here. And once we had this last break of structure here, we had this last break to the downside. The market did close above this particular area here, giving out change of character here. Now, upon having this change of character here, you can see that although the market did dish out this, the market actually did retrace. It didn't get to our potential area of interest. It could still do that because I could be waiting for it to come to this zone here after the market has cleared out these guys as liquidity. But if you look at it closely, it might not come there, right? So sometimes when the origin is a little bit further away, you just allow it. But in the upcoming weeks, I actually see this happening in a way. So if I find out that these guys are being cleared out as a trend line liquidity, then it's going to be good as well. It's going to be good as well. Like if you can follow and master this strategy, this is just some liquidity parts here. A lot of it equally did happen from within here, like that, where you can see that all of these guys were cleared out. This is the retracement part. This part here is what once you see that the change of character happens going up, there's a retracement that always takes place to clear out these guys, and then you get in on the move. So it could be quite bullish, but since I see that there's a lot of potential for it coming back here, I'll wait for it around here before I take that move. But if not, then wait for this break of structure and keep doing the same thing. So if there's anything you're supposed to take from this clip is, whenever you have a break of structure, wait for the market to come to a potential area where you know that it's a potential area of your order block. Once it's around there, don't just enter because you got to your order block. Wait for a change of character. Wait to see something like this where you have a last break to the downside, the origin that caused that last break is violated, and then you see the retracement, then enter on that. So with that being said, I'm going to move to some other pairs, like let's say for Solana. If I'm not mistaken, if we have something there as well, I think we didn't really get something for Solana. It's still moving similar to Bitcoin, but I think for gold there's something quite interesting with gold as well. Yeah. Okay, let's take a good look at this, for instance, to show you that this stuff is really a good one, right? Yeah, as you can see clearly here, this was the last break to the downside. I just want you to see clearly how you should visualize. This was the last break to the downside. The market dished out the change of character. Once we dished out that change of character, I said upon the retracement now, once it's retracing, you know very well that all these guys here that are just sideline liquidities and stuff like that. So this particular week here, the market always tries to hunt it. That's where you get your entry from. Sometimes when it just gets there without even showing, if you want to, you can wait for maybe to say you see a bullish candle before you get in or something like that. But once it gets to this area, especially after I've seen a change of character and it gets to have cleared out some liquidity from here, I get in, right? That's just how it works. Similarly as well from here, if you look closely as well, we had from here a break or structure to the upside. This is gold, by the way. We had a break or structure here to the upside. Yeah. Once we had this break or structure there to the upside, what then happened was, if you look at it closely, you can see that the market, as I told you before now, whenever you have a break or structure, the market is always going to want to retrace, yeah? And once it's doing the retracement, your duty is to do what? Is to wait for a change of character around you. If you step down to the 5 or 3 minute, you'll find a change of character happened here. I saw that as well. But based on this fair value gap availability, I knew that this market is definitely going to want to test this particular area out from here, right? So once you have this, I knew that it's going to test it, and from here we're going to be bullish targeting this. So next week these are positions, it was actually already moving. So by next week, these are actually areas where you should be actually looking out to watch out for gold and the likes of that. So it's quite good to understand that even GBP USD, GBP GPY, this was a sell position. I'm going to show you guys clearly. So now this is another case scenario here like this, right? So for instance, here we had, this was the last break here to the downside. Yeah, once we had this last break to the downside, I'll just give it a term like a break or something like that. Once we had this last break to the downside, you can see, as I always tell you clearly, you're waiting for the market to retrace. You could have, yeah, this is a buy opportunity here as well, and you see a sell opportunity. This is so amazing, guys. If you look at it closely here, you can see that this is the last break to the downside from this area here. Now this is the origin that caused that last break. The market then breaks it. Once it breaks it, you're waiting for the retracement. This is the retracement you get in on, right, to take it to the upside. Normally it's not like you take right up here, you target mechanically 1:3, probably you'll be targeting this zone here. That's what you'll be targeting. Let's say from, if your entry was, you were targeting from here to this area here, then you'll be targeting probably to this particular area. So that's fair enough. 1:3 at least always. Now, since you know very well that from this other perspective here, yeah, this was the last break here to the downside. From this is a higher time frame perspective I'm bringing to you here. So this was normally like the 15-minute time frame perspective, but if you step it out further, like let's say if you go to the 1 hour time frame, you realize that the structure normally showed more of this area like being the last break to the downside from here. This is where it happened, right? We had this break of structure to the downside here, and then it's not like a last break, but this is just like a break of structure to the downside, and we had now this impulsive move, and I realized that the market is having a high tendency to then react from this zone here. You can see a lot of fair value gap is available there once the market got then to it. Now, just because the market got to that area does not mean that I'll just sell from there. What I want to see, as I always tell you, is that wait for what? A change of character. This is where the change of character happened here. That means this is where the last break of structure happened. If you step this, you see the last break of structure to the upside. The market pulls down, clears it, making us understand that what we have a change of character here. Once we have this change of character, I'm waiting for the retracement. It retraces, and your entry is from this zone here. Once you enter, you just have to be patient and wait for the magic to happen. So with that being said, I know in this video I might not have gone so much in depth into the strategy, how to look for an order block, like waiting for maybe the retracement and stuff like that, but in my previous videos I actually did do a lot of that. But you just observing, you can see there's a good strategy. It relieves you a lot of time from just watching at the chart without knowing what to do. It helps you understand the market structures much faster, right? So with that being said, don't forget to like, share, and subscribe, and hope to see you guys in the next videos. Right, with that being said, bye bye.